I've always said the market is never wrong. Never, it just is. Prices are the only truth out there, but what most people miss is this: the market talks to you in ways beyond those price bars, beyond those charts you stare at all day. You can sit there and look at lines and patterns until your eyes burn out, but if you don't learn how to listen to what the market is whispering underneath it all, you'll always be late. The real secret isn't the picture on the chart, it's the meaning behind it. Let me tell you, I've seen fellows go broke believing too much in the chart alone. They'd trace out a head and shoulders, or a double top, and they'd bet their whole stake on it. They thought that was the whole game. But the market doesn't pay because of the shape of a pattern. It pays because of the psychology driving the crowd that made that pattern. The chart is just the footprint. What matters is the beast that left it. Do you follow me? When I was a boy, I learned early that tape reading was about watching the buying and the selling as it unfolded. But even there, the trick wasn't the numbers on the tape. It was how they came in, the speed, the hesitation, the push, the pull. You could feel the mood, and isn't mood just another way of saying psychology? That's the real market beyond the chart, the mood of the crowd, the fear, the greed, the desperation, the hope. Think about it. Have you ever seen a stock push up strong for days, and then all of a sudden it hesitates, like it can't take another step forward? That hesitation, that moment of weakness, isn't drawn by the chart. It's lived by the men and women holding the stock. Some are looking to grab profits. Some are scared it's gone too far. Some are stubborn and believe it'll go higher, and all of them together create that stall. The chart will show it, yes, but the meaning is in the behavior. You can feel it if you pay attention. Isn't that true? I'll tell you a story. Years ago, I watched a stock that had been climbing steady. Every dip was bought up like candy. The chart looked perfect. Most fellas thought it was bound to keep going. But then one afternoon, it started acting peculiar. It wasn't dropping, no big break, just heavy. You could see the buying wasn't snapping it back the way it used to. That was all. No big pattern screaming at you, just a change in tone. And sure enough, not long after, the thing rolled over and dropped like a rock. The chart boys didn't see it until it was obvious. But if you watched the behavior, the market's body language, you knew ahead of time. Now here's the thing: people want the market to be mechanical. They want a formula, something they can copy. But the market is a living crowd. It breathes. It has tempers. Sometimes it's cheerful and careless, other times it's scared stiff. Do you think you can capture that with one line on a graph? The biggest mistake is believing that history repeats in the exact same way. It doesn't. But human nature, oh, that never changes. People in 1901 felt fear the same way people feel fear today. They got greedy the same way. That's the part you've got to read. And once you learn to read that, you'll see beyond the chart. Let me ask you, when you see a breakout on a chart, what do you think it really means? You might say, it means the price is going up. Sure, but why? It means enough people have decided they're willing to pay more, and the sellers have dried up. That's psychology. It's not the line that matters. It's the human action behind the line. I used to stand on the exchange floor, and I could sense the shift before it showed anywhere else. The shouting got louder or quieter. The eagerness changed. Men who were fearless a week ago suddenly looked doubtful. That doesn't show on a chart right away. But it's the signal that moves the chart later. The chart is the echo, not the voice. Do you see? Now don't mistake me. Charts are useful. They give you the footprints. But don't marry the footprints. Always ask, what kind of animal left these tracks? Was it running? Was it tired? Was it limping? That's where the money is. That's the secret beyond the chart. And let me say this plain, the market is a great deceiver. It'll set traps for you. A chart can make you believe something that isn't real. A false breakout, a head fake, a washout low. Ever been caught in one of those? That's when you learn that just seeing a pattern is never enough. You have to know if the psychology behind it is strong or weak. You ever notice how a stock will test you? It'll break out, run a bit, and then come right back down like it wants to shake you off. That's not the chart doing it. That's the crowd. The weak hands buying and then selling in fear. The strong hands scooping it up. If you don't understand that dance, you'll always be the one giving your shares to the strong hands. Isn't that what usually happens? I'll tell you something else. Volume is the closest thing you'll find to the market's voice. A chart without volume is like reading lips without hearing the sound. But again, it's not just the size of the volume bar, it's how it comes in. Heavy buying on a rise that holds, that's conviction. Heavy selling on a drop that won't bounce, that's panic. But if you see heavy action and the price doesn't move much, that's absorption. Strong hands taking all the weak hands have to give. That's not on the chart, that's in the behavior. Think of it this way: the chart is the surface of the water. Calm or stormy, it tells you something. But what matters is the current underneath. The surface can fool you. The current tells you where you'll end up. You can't see the current with your eyes. You have to feel it, judge it, read it. Now, a man asked me once, how do you learn to read that? I said, the same way you learn anything. By watching, by losing, by paying tuition to the market. Every mistake is tuition. Every loss is a fee. But if you pay attention, you start to notice the little tells, and after enough time, you stop looking for certainty and start looking for behavior. Don't you think it's funny how the market will always do whatever makes the majority look foolish? That's no accident. That's how it has to be. If everybody could win just by following the same pattern, there'd be no market. So the chart you're staring at, the obvious setup that's usually the bait, the real move is hiding in how the crowd reacts to it. I've been in trades where I felt the whole room leaning the same way. You know what I did? I leaned the other way, not because I'm contrary by nature, but because when the crowd is too sure, it's already too late. That's the pulse you have to sense. The chart will only tell you what already happened. The market's mood tells you what's about to happen. Let me pause and ask you, how many times have you seen a stock break to new highs? Everyone cheers, and then it collapses the very next day. That's the trap. That's the market punishing the obvious. The smart money was selling into that strength, while the crowd was buying the breakout. The chart showed the breakout. The behavior told you it was a trap. Another thing, you can't be stubborn with the market. You can have your opinions, your predictions, but the market doesn't care. If the crowd shifts, you shift. The worst losses I ever took were when I argued with the tape, when I thought, it has to go my way because the chart says so. The chart is history. The market is alive. Which one do you think wins? It's like poker. The cards matter, sure, but the players matter more. You don't play the hand, you play the man across from you. Same with the market. The chart is the hand. The behavior of the crowd is the player. Read the player, not the hand. And don't forget, markets have memory. Not on the paper, not in the ink, but in the minds of the men trading. A stock that collapsed once from a level will find sellers there again, because people remember their pain. A stock that gave rich rewards on a breakout will find eager buyers again, because people remember their gain. That's not a line on a chart that scars and greed living in human minds. You see why I say the real secret isn't in the drawing. The market is people. Always has been, always will be. And if you want to read beyond the chart, you've got to learn to read people. Only you do it through the way they act on price. The chart shows footprints, but the real game is reading the beast that left them. Now let me tell you what I mean by that, because most folks miss this entirely. They sit in front of those charts all day long, drawing lines and patterns like a man trying to read tea leaves. They believe if they can just spot the right formation, they'll know exactly what's coming. But the truth is, the chart doesn't tell you where the market is going. It only tells you where it's been. It's the footprint. And a footprint by itself is nothing but a mark in the sand. What you really need to know is what made it. Was it a lion, a rabbit, or just the wind? That's the difference between making a living in this business and losing your shirt. Think about it. When you see a chart, you see candles, bars, lines. Those are marks left by the crowd, by every buyer and seller who stepped into that market. Each mark is a print of their action. But who are they? Are they nervous newcomers throwing in a few dollars? Are they seasoned pros building a quiet position? Are they big operators unloading stock into strength? The chart doesn't tell you outright. It only shows you the trail they left. If you stop at the footprint, you're blind. If you learn to read the beast behind it, you've got the real edge. I'll give you an example. Suppose you see a steady rise in a stock, day after day. The chart looks beautiful. Every technical man out there is smiling. But then you stop and ask yourself who's behind that rise. Is it a crowd of small traders piling in because the newspapers are cheering it on? Or is it quiet, heavy buying by strong hands who don't care about the noise? If it's the crowd, the move won't last. If it's the strong hands, they're building a campaign, and that's where the real money is. The chart alone won't tell you which it is. You've got to learn to feel it, to sense it in the way the price acts, in how it responds to pressure, in how it breathes. Ever watch a stock that rises steadily, then suddenly dips hard one day? On the chart it looks like weakness, a crack. Most people panic, thinking the beast is dead. But if you read the behavior, you might see something else. If the dip is met with heavy buying, if the stock refuses to stay down, that's not weakness. That's strength. That's the beast shaking off the weak hands, scaring them out so the strong hands can collect. The footprint of the dip is there, but what really matters is the beast's action, the deliberate shakeout, the way it refuses to fall further. Do you see the difference? I learned this lesson early, watching the tape in the bucket shops. The tape gave me prices, but the game wasn't in the numbers alone. It was in the way they came through. Sometimes the prints would hit fast, one after another, like a herd stampeding. Sometimes they'd slow down, hesitate, like the crowd didn't know which way to turn. That was the beast behind the print, and that was worth more to me than the chart, because the chart would only show a steady rise. The tape showed me whether the rise was eager, desperate, or steady and confident. The chart gave me footprints. The tape let me smell the animal. Ask yourself this when you see a breakout: who's doing the buying? Is it small fry chasing headlines? Is it professionals pressing their advantage? Is it insiders feeding stock to the crowd? The footprint on the chart is the same in each case, a breakout, but the meaning is worlds apart. And if you don't learn to ask that question, you'll be the prey, not the hunter. Haven't you been there before, thinking you were following strength, only to realize later you were just food for the bigger game? Now let me be clear, I'm not telling you to throw your charts away. Charts are useful. They show you where the footprints are. But don't confuse the track with the animal. The chart is only the trail. You still need to know whether it's worth following. A footprint can lead you to dinner or lead you to your death, depending on what left it. You wouldn't follow lion tracks into the jungle without knowing it's a lion. You'd prepare. The same with the market. When you see that footprint, prepare by asking who left it. Why? What do they want? You'll notice something else if you pay attention. Different beasts leave different kinds of tracks. The public, the great mass of small traders, leaves choppy, noisy footprints. They rush in and out, excited one moment, scared the next. Their tracks zig and zag, never steady. But the professionals, the strong hands, they move quiet. Their footprints are measured, steady, deliberate. They don't stampede. They accumulate. And when you see that kind of footprint, you know you've found something worth watching. Picture this. A stock moves up slowly, almost too slowly. The average trader gets bored and walks away. The chart doesn't look exciting. But if you read the footprints, you see steady, persistent buying, day after day, never letting it drift too far. That's the strong hands at work. That's the beast. Later, when the stock finally breaks out, the crowd rushes in, thinking they're seeing the beginning, but the professionals already own it. The footprints told you so, if you knew how to read them. On the other side, you'll sometimes see wild spikes, big swings up and down. The average trader thinks it's opportunity, but if you read it, you know it's noise, the footprints of the crowd, running in circles, confused. There's no real beast behind it, just rabbit scattering. That kind of footprint doesn't lead anywhere, and if you chase it, you'll end up lost in the brush. Don't you see? The chart by itself is only ink on paper. The real edge is asking, what's behind this ink? What creature made these marks? And the answer isn't always easy. It takes time, mistakes, losses, and watching. But once you start seeing the market as a living beast and the chart as its trail, you'll never look at price the same way again. Sometimes the beast is hungry. Sometimes it's tired. Sometimes it's wounded. You can tell by the way it leaves its tracks. Heavy buying without progress, that's the beast straining, struggling to climb but weighed down. Light selling, but steady progress downward, that's weakness, exhaustion. The footprints tell the story if you read the weight and the stride, not just the shape. I remember a stock years ago that looked perfect on the chart. The formation was textbook, but the way it traded told another story. Every time it rallied, the action was sluggish, like a tired mule. Every time it dipped, it dropped fast, no resistance. The footprints were there, yes, but they were the footprints of a sick animal. The chart readers bought the formation. I passed. A week later it broke down and never came back. The beast told me before the chart did. Now, let me ask you, when you look at your charts, do you stop and think about the creature behind those moves? Or are you only staring at the lines? Be honest with yourself. Because if you're only looking at the print and not the beast, you're missing the whole game. The footprints are always there. But what matters is the living force that made them. Until you train your mind to look past the ink and see the behavior, you'll always be following the trail instead of hunting the animal. And the market doesn't reward the follower. It rewards the hunter. The real secret is this: the chart records history, but the crowd writes the future. Most men don't realize that. They think the chart is a fortune teller, that if you study it hard enough, you'll see tomorrow written right there in black and white. But tomorrow isn't in the ink. Tomorrow is in the heads and the hearts of the men trading today, in the way the crowd thinks, feels, and acts. The chart shows what they already did, not what they're about to do. If you confuse the past with the future, you'll always be a step too late. I learned this lesson when I was a boy staring at the tape. The tape would roll out yesterday's prices right alongside today's, and I saw that yesterday's numbers didn't move the stock. Only today's buying and selling did. The chart is the same way. Yesterday's pattern, last week's formation, last month's high, they're all marks of what already happened. The question is, what is the crowd going to do next? Because the crowd is the one writing the next chapter. You can't find that answer on yesterday's page. Think about it. Every price on a chart is a deal between two people, one buyer, one seller. That's history. That trade is done. Over. What matters is what the next man will pay, what the next man will sell for. The chart can't tell you that. Only the crowd's state of mind can. If the crowd is greedy, they'll pay more. If the crowd is fearful, they'll dump their shares. The chart records the deal, but the crowd decides the next one. Isn't that the truth? Most traders, when they look at a chart, they see lines and levels and patterns. They tell themselves, if it breaks here, it will rise. If it fails here, it will fall. But what they're really saying, whether they know it or not, is if the crowd behaves this way, then this will happen. The chart is not magic. It's just a diary. The crowd is the author, not the paper. I remember once, a stock had been in a long decline. The chart looked terrible. Nobody wanted to touch it. But the behavior of the crowd started to shift. You could feel it in the way it stopped falling on bad news, in the way volume dried up on sell-offs. The chart still showed a downtrend, but the crowd had stopped throwing their shares away. Then, little by little, new buyers crept in. Before long, the stock turned and ran. The chart told you it was weak. The crowd told you it was finished being weak. And the crowd was right, because they wrote the future while the chart only remembered the past. The same works the other way. I've seen stocks flying high, breaking every resistance level, charts looking like stairways to heaven. But the crowd was stretched thin, buying on margin, piling in late, driven by hope and greed. The chart showed strength, but the crowd was exhausted. And sure enough, when the last eager buyer had bought, there was no one left to push it higher. The fall came sudden and brutal. The chart showed a picture of glory. The crowd wrote a story of collapse. You ever notice how markets fool the most people at the most obvious moments? A breakout everyone sees, a collapse everyone fears. Those moments are chart history being mistaken for future certainty. The breakout may be real, but if the crowd is too heavily committed, it can't sustain. The collapse may look fatal, but if the crowd is already drained of sellers, it can't go much further. The chart shows the picture, but the crowd decides the script. It's like watching a play. The stage sets are the charts. They tell you what the scene looks like. But the actors, the crowd, decide what happens next. You can't know the ending by looking at the backdrop. You have to watch the actors, their moods, their movements, their intentions. The chart is the stage, the crowd is the play. Ask yourself this: why do certain levels on a chart matter at all? Why does a breakout above an old high bring in buying? Why does a drop below an old low bring in selling? It isn't the line itself that has power. It's the memory of the crowd. Traders remember losing money at that level, or making money, or missing out. Those memories shape their actions. The chart records the line. The crowd gives it meaning, and it's the meaning that moves tomorrow's price, not the ink on yesterday's paper. When I traded in the old days, I'd watch the way a stock acted at certain levels. Did it fight? Did it hesitate? Did it burst through with ease? That told me how the crowd felt, whether they were fearful, confident, or indifferent. The chart showed the line, but the crowd showed the intention. If you want the future, you have to measure intention, not history. Sometimes a chart looks dead flat, lifeless, no movement. Most men turn away, but if you look closer, you might see the crowd quietly accumulating little by little, no fuss, no noise. That stock is like a seed underground, unseen on the chart, but ready to sprout when the time comes. Other times a chart looks alive, surging, full of energy. But if you look at the crowd, they're already overcommitted, stretched to the limit, out of ammunition. That stock is like a fire burning bright just before it dies. The chart shows you the flame, but the crowd holds the water or the fuel. Do you see why I say the chart is only history? It's a photograph. A photograph doesn't move. The market is alive, breathing, shifting. The crowd is what keeps it alive. Every print on the chart is yesterday's heartbeat. Tomorrow's heartbeat hasn't been recorded yet, and it won't be until the crowd decides how it wants to beat. That's why I never let myself fall in love with a chart pattern. Patterns don't move the market. People do. A head and shoulders means nothing if the crowd doesn't believe it. A double bottom is just two lows if the crowd doesn't act on it. It isn't the pattern that has power, it's the belief, the memory, the psychology. That's why two identical charts can produce two completely different outcomes. The history looks the same, but the future is written by different crowds. So the next time you look at a chart, ask yourself, what does this tell me about the crowd? Are they fearful or greedy? Are they strong or weak? Are they trapped or comfortable? Don't stop at the line. Don't stop at the bar. Use the chart as a clue, a record of what's been done. But remember, the future lies in the minds of those about to trade, not those who already did. And let me ask you this: when you buy a stock, do you believe the chart alone is your safety, or do you think about who else is in there with you? If you're buying with the crowd late in the move, you're in danger. If you're buying when the crowd has given up and walked away, you're in opportunity. The chart can look the same in both cases, but the crowd makes all the difference. The chart records the footprints. The crowd decides the next step. If you learn to read the crowd, you'll see the future unfolding before the ink ever dries on the chart. That's the secret most never learn, because they're too busy staring at yesterday's picture, hoping it will tell them tomorrow's story. Market psychology, fear, and greed is the fuel behind every move. That's the whole thing in a nutshell, but most men would rather bury themselves in numbers and ignore it. They think the market runs on mathematics, on ratios, on angles and theories. But let me tell you something I've learned through all my years of trading: the market doesn't move because a chart says it should. It moves because people feel scared or they feel greedy. That's it. Strip everything down and that's all that's left. If you understand that, you understand the market's heartbeat. Fear and greed, they're twins that run the market like a pair of mules pulling a cart. One mule pulls too far ahead, then the other takes over, and they never stop tugging. Sometimes the cart goes fast, sometimes it stalls, sometimes it tips over. But it always moves because those two mules are pulling it. You want to know where the market's going? Don't stare at the cart. Watch the mules. I've watched fear grip a whole crowd like a fire sweeping through dry grass. Prices plunge. Men rush to sell at any price. The tape spins faster than you can read. There's no reasoning in it. Fear doesn't ask questions. Fear just shouts, "Get out!" And everyone obeys. That's when stocks sell for less than they're worth, because fear is stronger than arithmetic. Have you ever felt that in your own stomach? That tightness, that urge to get out no matter what. That's fear driving you, same as it drives the whole market. On the other hand, greed is just as powerful. Greed makes a man blind to danger. It makes him believe the good times will last forever. I've seen stocks climb higher than anyone thought possible, not because the business was better, but because the crowd couldn't stand the thought of missing out. They bought more, borrowed more, pushed prices up until they reached a place that made no sense at all. That's greed talking, whispering in a man's ear, "Buy more, you'll be rich." Haven't you heard that whisper yourself? Haven't you seen a stock going up and thought, "If I don't get in now, I'll regret it forever"? That's greed pulling your strings. Now, when fear and greed take turns, the chart will record their quarrels. You'll see swings, spikes, drops, recoveries. But the chart is only the diary. The real motion comes from the crowd's feelings. And the crowd is never rational, never balanced. They swing from one extreme to the other, always too scared or too greedy, never steady. That's why the market runs in cycles, because men can't help themselves. They always overdo it. I'll give you an example. I once watched a stock climb for weeks, smooth and steady. Every dip was met with buyers. The papers praised it. The crowd piled in. It was greed, pure and simple, feeding itself. But then one morning, bad news hit. Nothing catastrophic, just enough to shake the weak hands. The stock dipped a little, and suddenly greed turned to fear. The same men who swore it would go higher yesterday couldn't sell fast enough today. The chart showed a reversal, but what really moved the price was the crowd flipping from one mule to the other. It wasn't logic, it was emotion. And that's the secret. Fear and greed never vanish. They just trade places. When you see a panic, know that greed will come back in time. When you see a mania, know that fear is waiting around the corner. You can't time it to the minute, but you can count on the cycle. Because people don't change. Human nature is the same now as it was 100 years ago, and it'll be the same 100 years from now. That's why I never believed in the idea of a new era in the market. There's no new era for human emotions. Have you ever wondered why markets fall faster than they rise? That's fear at work. Fear is sudden. It makes men rush for the exits all at once, tripping over each other. Greed is slower. It builds step by step, because men are cautious at first, then braver, then reckless. That's why bull markets climb the stairs and bear markets jump out the window. It's the psychology behind the moves, not the chart itself. The trouble is, most traders don't admit how much fear and greed control them. They dress it up in other words. They say, "I'm being prudent," when they're really scared. They say, "I'm confident," when they're just greedy. But the market sees through it. The price tells the truth. And if you learn to read the truth of fear and greed, you'll be ahead of the crowd. Picture a stock sitting quiet for weeks, not moving much. Then, out of nowhere, it starts to creep up. Slowly at first, then faster. The crowd sees it, gets excited, starts buying. The rise feeds on itself. Greed grows. Then comes the climax when everybody has to be in. That's the top. The chart will show you a spike, but the psychology will tell you the story. Greed has burned itself out. There's no one left to buy. Right after that comes the fall. Or picture a panic when everyone is dumping shares, no bid in sight. The chart shows a plunge. But the psychology shows exhaustion. Fear has done its worst. The strong hands step in and buy because they know fear can't keep selling when there's nobody left to sell. That's the bottom. The chart confirms it later, but the real clue was in the emotions. Do you see how it works? The market is a mirror of human nature. Fear and greed are what you're really trading, not the chart. The price is just the thermometer. The heat comes from the crowd's emotions. And if you learn to read the heat, you'll know when the fever is about to break. I used to say, it was never my thinking that made big money for me. It was always my sitting. But what I really meant is this: I sat still when I knew the crowd's emotions still had further to run. I didn't jump out too early because the chart hit some line. I stayed until the psychology turned. That's the only way to catch the big swing. You ride greed until it tips into madness. You hold fear until it tips into exhaustion. That's the edge. So when you're trading, ask yourself not what the chart says, but what the crowd feels. Are they scared? Are they greedy? Are they exhausted? Are they desperate? Those are the questions that matter. Because fear and greed are the real market movers. The rest is just the record they leave behind. You don't trade the chart, you trade the people behind it.